A voice with the weight of wisdom, experience, and a strong faith in the future conveys a powerful message. One that could potentially change your financial path. It's a call to action, a plea, and a promise of something extraordinary. In this captivating video, Cathie Wood explores the future of Tesla and electric vehicles, but I don't think it has anything to do with the strike. Instead, I think it has everything to do with consumers' preference for better, cheaper electric vehicles, which Tesla is driving down in price by simply passing cost reductions on to its customers. So I think that's good for Tesla. The complaint we hear is that people can't afford these vehicles. You can see in the UK news that Rishi Sunak is pushing back targets to phase out all internal combustion engines by 2030. Are we being unrealistic about this transition? No, we don't believe so. In fact, the total cost of ownership of an electric vehicle was lower than that of a gas-powered vehicle 2 to 3 years ago. Do sticker prices include insurance? Yes, insurance is included. This is in the United States, where things are a little different. Yes, as I mentioned, there are local differences, but in the US, insurance does cover everything. In fact, Tesla is so confident that its vehicles will experience fewer collisions and fatalities that it is willing to offer insurance. So yes, that covers everything. We have always made long-term investments, but what interrupted what was a very admirable move was a significant increase in interest rates. Come along as we unravel the mysteries of Tesla stock, the overall cost of owning an EV, and the financial environment. As we delve far into the world of Tesla and the electric vehicle, what precisely does she want you to do with those Tesla shares, and what secrets are hidden within Horizon? As we make our way through this financial maze, we'll reveal the mysterious allure of Tesla stock with a drop of generous incentives and a visionary's unwavering faith. Are you prepared to embark on this thrilling journey? Revolution will examine strategies, challenges, and the unwavering conviction that's captivating investors worldwide. Travel with us. The voyage ahead is full of detours, but it also holds the possibility of revelation and insight. Are you prepared for the revelation? Keep an eye out. Don't miss this thrilling exploration of the finance and innovation industries by subscribing. Welcome to Tesla Stock News, and let's begin exploring the electric vehicle industry. The emphasis is on a more comprehensive view of the EVV environment rather than just Tesla. Detroit's recent developments may have an effect on Tesla, particularly in terms of decrease in the event of a strike that results in possible shortages. But the larger picture indicates that this movement is mostly driven by changing consumer preferences, favoring reasonably priced electric vehicles rather than just labor issues. Some may contend that electric cars are still pricey, for example, in the UK, but Tesla is leading the way in this shift by continuously cutting prices and passing them along to its customers. Rishi Sunak, an important factor that is frequently ignored in this discussion, is the total cost of ownership in the United States. This viewpoint has already seen a significant shift since the ex-chancellor decided to extend the deadline for phase out of internal combustion engines from 2030 to 2035. This decision has sparked discussions about the viability of this transition, with some questioning whether consumers can truly afford the shift to EVs. Electric cars have reached a tipping point where they are now both economically and environmentally advantageous for buyers. Even after accounting for insurance premiums, the overall cost of owning an EV is now less than that of conventional gas-powered cars. This change reflects how the affordability of EVs is changing. This affordability factor has been further enhanced by Tesla, a market pioneer in electric vehicles. They are so sure of the dependability and safety of their vehicles that they include insurance in the ownership package. This special offer is an alluring option for individuals thinking about making the conversion to electric vehicles, since it not only makes the procedure easier for Tesla owners, but also makes selecting an E more appealing. Although the UK's decision to prolong the phase-out of internal combustion engines raises legitimate concerns about the viability of the transition, it's important to acknowledge that the market is changing, and that, especially in the US. The total cost of ownership has moved in favor of electric vehicles, making them not only a financially astute but also environmentally responsible choice. In relation to technology and innovation, ARK Investment Group is using a different strategy than Capital Group and other conventional diversified funds. ARK is determining its path. It is motivated by in-depth research and a first principles methodology that focuses on businesses positioned to revolutionize industries, while conventional funds. ARK's approach may closely follow broad benchmarks, but it has little relationship with them. Looking ahead, the main concern is whether this less diversified approach can be successful over the next 5 years. This diversity shows ARK's dedication to diversification and its conviction in comp firms that have the ability to change the world, even in the face of unprecedented market conditions. ARK is confident in its mission to support companies that are driving disruptive innovation. The market is now closely examining the Federal Reserve's actions, regardless of whether there is another rate hike or not. The expectation of rising rates caused underperformance in 2021, which intensified in 2022. Therefore, the question arises as to how the renowned investor Cathie Wood's approach will change in light of these sobering quarters. ARK believes that by investing in transformative companies, It can weather challenges like the recent spike in interest rates. How does she modify her approach to the constantly changing macroeconomic environment, particularly in light of the difficulties presented by the pandemic? It's crucial to remember that Cathie's faith in innovation endures even in the face of adversity. She sees innovation gaining traction precisely in such difficult environments, which is why her portfolios continue to outperform. The path to recovery entails focusing on revenue growth and expanding profit margins. In recent years, wealthy retirees have shown unwavering faith in Cathie Wood's approach. These individuals, who are sometimes called old farts, have made significant investments in innovative technology in companies like Apple, choosing to ignore the noise from financial TV or radio and reaping the rewards of their choices. Now, given the volatility observed over the last few years, can the Cathie Wood approach continue to be successful for the next 1, 3, or even 5 years? Cathie claims that her strategy is now prepared for the mainstream and that the recent acquisition of Rises, a business that focuses on global megatrends in Europe and the UK, further supports her belief that the worst of the interest rate surge, which had a major impact on performance, is behind us. Reflecting on the early 2000s tech and telecom boom, although Tesla may be shifting to slower growth, Cathie points out that the seeds for the current market dynamics were sown during that time and that it still presents growth potential at a competitive price. Tesla's stock is more appealing now since it is more affordable than it was a year ago. Furthermore, certain facets of Tesla's operations, such as its fully autonomous driving capabilities as Tesla expands its operations and works toward its 2020 battery day goals, it is likely to earn larger profits, giving it an appealing investment prospect. Insurance ventures and cost-saving efforts are undervalued. When examining Tesla's growth trajectory over the next 10 years, it is anticipated that revenue will expand, robustly exceeding even the management's aggressive 50% target. To get a better understanding of Tesla's prospects, we need more openness, thorough analysis, and future guidance from the company. Such insights would help investors align their expectations with reality. This outlook offers an alluring opportunity for investors at the current stock price, but it's important to note that Tesla recently missed its internal target to achieve over 50% growth in deliveries in the last quarter, recording a still commendable 40% growth. Although impressive, management's announcement of a multi-year 50% year-over-year growth target lacks the level of detail that investors frequently look for given Tesla's growing scale. As Tesla now manufactures over 1.3 million vehicles annually, there is an increasing susceptibility to economic changes. Even little slowdowns in the economy might affect consumer demand, necessitating more specific guidance and annual targets. Additionally, investors are eager to gain confidence in the accuracy of these growth projections because high-growth stocks like Tesla are particularly vulnerable to valuation shifts based on slight alterations in growth rate assumptions. Now, let's discuss the incentives that might be necessary to entice U.S. buyers. The question is whether price adjustments will be necessary. It's likely that Tesla will implement minor price cuts to ensure that a greater number of its vehicles, particularly the Model 3 and Model Y, qualify for the Inflation Reduction Tax Credit. This tactic might be crucial for surviving a downturn in the economy. One of Tesla's main strategies is to encourage rapid demand growth. How are they going to do this? Well, they're thinking of lowering platform prices in the upcoming year in an effort to create organic demand growth, which is a key part of Tesla's growth strategy. The company wants to reach in astounding 1.6 million deliveries in 2023, but here's a reality check. Even though Tesla may not always fulfill its promises, it's vital to take the bigger picture into account in the quick-paced world of finance. Tesla had previously stated their expectation of a 50% growth rate over a multi-year horizon, but the real world frequently has its twists and turns due to global economic conditions, unforeseen challenges, and market dynamics. Even a minor error might cause big swings in the stock price. Investors now have to deal with a difficult reality. When it comes to Tesla, there are two important things that watchers should be paying particular attention to. First, as 2023 approaches, closely monitor Tesla's growth pace. With a prediction of a 24% increase in deliveries for the upcoming year, a double-digit growth rate is still anticipated when taking profit measures into account. Additionally, there is potential for further improvement given the ongoing ramp-up of production in factories like Austin and Berlin. In more recent news, Cathie Wood of ARK Investment Management reaffirmed its confidence in Tesla in a startling display of confidence. Tesla has demonstrated impressive margins in the past. In a significant move during the first U.S. trading session of the year, ARK Investment Management, led by Cathie Wood, demonstrated their strong trust in Tesla's long-term potential by purchasing more than 176,000 shares of the company. Following quarterly deliveries, Tesla's stock took a knock and fell by 12%, prompting this investment decision. Even though the business is providing generous incentives to increase sales, ARK's ongoing acquisition of Tesla stock since October 3rd shows their belief in the electric vehicle pioneer. This calculated move is in line with ARK's vision for innovation and technology in the future. Let's now examine the larger picture. Like many other companies, Tesla had its share of difficulties in the last year, and the value of its stock fell by an astounding 65%. This decline was caused by a number of factors, including among the main issues are inflation and rising interest rates. The demand for electric vehicles has been significantly impacted by these macroeconomic considerations. As we evaluate the scenario, it is clear that Tesla has been at the forefront of a market that has seen many ups and downs, much like the stock market itself. We've looked at the world of Tesla and its prospects for the future. We've examined the strategies and challenges faced by Tesla, as well as the unwavering confidence displayed by influential investors like Cathie ARK Investment Management. We've also looked at the affordability of electric vehicles, noting the extension of the phase out of internal combustion engines in the UK and the importance of taking into